So a big pickup candle on Friday from Opex here, as you can see on the daily chart here for SPY. However, if you look a little bit closer at the chart, let's say the 1 hour, for example, you can see that there's a head and shoulders pattern playing out here. We have the left shoulder over here, we have the head, and then now the right shoulder, which is a little bit more extended than the left shoulder was over here. However, if you look at the daily chart as well, we are seeing something very similar with a larger head and shoulders pattern. We have a left shoulder right here back in end of October, early November. We have a major head that stretched all the way from around mid-November to mid-December, so a month long, and then a right shoulder over here. Yes, you could argue that this right shoulder is much higher than the left shoulder was over here, although I would argue that if you look over at QQQ, this is the reason why that SPX shoulder is much higher, is because QQQ had some catching up to do since it's been characteristically one of the most bearish indexes compared to the Dow Jones or the S&P 500. NASDAQ has been one of the most bearish indexes and again had to catch up. So it's formed a perfect right shoulder on this chart for a head and shoulders pattern in comparison to SPY's, which had a slightly higher right shoulder, but still both remain the same in terms of a bearish pattern, and we still are below this downward trend line that I've referenced many times in the videos in the past, but you can subscribe below if you're interested in more of our content. We post every single Wednesday and Sunday, but this downward trend line that started all-time highs, we've stayed below so far. We've yet to have a decisive break above that level, and just technically speaking, that means the trend still remains down, the fact that we are still under this, so you do have to keep that in mind. And there's one thing I was interested in from this past week. If you look at the Twitter account, you saw that we posted a lot of calls hit the tape back here on January 18th. This is very unusual to see a lot of these, like 5.6 million in premium, 1.2 million in premium, 2.7 million in premium. All these were above the ask, as you can see here in order details. Plus, a lot of these were pretty far out the money. And it was the same thing if you looked a little bit later in the same day for January 18th, as well as if you continue upward much later in the day. You can see here we had 2.9 million in premium for the 402 strike at 392 as the spot price. And as you look further, you can see that they still were adding like 1.0 million. The 400 strike at 391.40 was the spot price for this one. So very interesting to see this, as well as this 1.5 million in premium for the 395 at 389 for the spot price. Take note of that spot price. We saw these both on 118 and also 119 in terms of the date. If you look over here, this was basically whales predicting the Opex rally that we've seen so far, with potential continuation after, because if you remember, they were loading around the mid 390s back on this major down day when we went down 1.58%. If you look just intraday over here, these whales were loading pretty aggressive calls as we continued down. So they were confident in this Opex squeeze and potential post Opex squeeze to start off early this week. Again, I still remain bearish in the mid to long term. However, just based on the daily chart, looking at this candle in this big upward trend that we had on Friday, there's potential we could have some wicks above this downward trend line to start off next week. And again, based on what we've seen in terms of the flow, very rare to see this kind of call flow, especially as we've continued throughout this bear market. When you see flow like this, definitely pay attention, because characteristically it's been a lot of puts after puts after puts. So seeing a lot of these calls as we were looking at as we continue down over the course of the past couple days from last week, very interesting, and definitely set alarm bells off for some potential upside, which Opex did start off. But again, if you look even closer here, look at the expiration of these contracts. 210 over here for February 10th, 201. Like, these are very close in expiration, other than this one for the 421 strike. A lot of these were super close in expiration. You can see 210s throughout all of these from the 118 earlier in the trading session. So a lot of these have super close expirations, which means that these are either very short-term directional bets on price for this upside, or very short-term hedges for potential short positions, because they saw a potential bounce here through Opex, and they bought them rightfully so, because this ended up happening where we had this squeeze with, again, a possibility of a little bit more upside to start off this week. But just keep in mind that the expiration is very close. They are not holding these most likely over a week, especially from now. So do keep that in mind. The short term still remains in this chop to slightly bullish sense. But if you look at the long term, like look at these March puts, 317, 331 for these, all these 1 million in premium puts, the mid to long term, like March to June time period, if you look through flow, just based on flow, again, there's a lot of other things like technical indicators pointing to some more downside in the mid to long term, but just based on flow, we've seen a lot more potential for downside in the mid to long term, so March to June time frame. So do watch out for that, especially because a lot of bulls may have been euphoric after seeing such a large up day on Friday, along with the call flow we've been seeing for the past couple of days so far from the recent week. But again, expirations, very short on those. So this rally should be very short-lived before the downside resumes, along with the fact we see a lot of these technical bearish patterns starting to emerge. Something else I'd like to talk about today is a lot of people like to overthink setups, and I personally have fallen a culprit to this as well. Very difficult not to overthink, especially when everything seems to be choppy in the market. But what I've noticed is sometimes the most simple setups end up playing out to fruition. For example, this downward trend line that we saw for the first time acted as a resistance back here in March. And in August, when we ended up continuing to the upside over here, nobody thought that this would end up being the top, or at least the downward trend line would mark the top of this upward move once we ended up hitting. Like, this was never a target for people. People thought it would either fall back around the 410 level and continue downward, and then once we got up to here, people thought we were going to all-time highs afterwards. So the sentiment was very skewed in either like extreme direction, when in reality this ended up being the exact top before falling quite a bit. It was like over 800 points on SPX, and we've seen over here we've had a topping process around this downward trend line yet again. And along with that, if you look over here at the VIX, if we just keep that simple or simplicity mindset to something like the VIX, every time we've traded within this boxed range that I'm showing you right here, around this, we can call it demand zone, even though it is volatility. Every time we've traded around this box right here, it's always marked a low on the VIX, and in comparison, that would be a high on the S&P 500 in most cases. So again, just based on simple technicals, by looking on here, yes, you can overthink it if you want. There's a lot more to it, but just based on simple technicals, we are within this box, which means that a bottom is likely to have already formed on the VIX or is very close to forming. Again, just based on pattern recognition. People like to say it's impossible to look at technicals on something like volatility, but again, if you use the same exact principle for the highs we've made, anytime we were within this box up here, the market ended up bottoming, at least the S&P 500, which means that the VIX ended up topping. Volatility topped around all of these time periods, which this is a very nice pattern to look at. Does it always have to play out? No, but still, we see that there's a similarity. Volatility typically topping around this range, as well as volatility typically bottoming around this range. So this is something to note, as we had done a little bit of a bounce from here right now, and we are still trading right within this box. Something to be careful of, especially as sentiment seems to be getting more and more bullish every day in terms of just the general public and retail. It's always good to look at perspective, take a step back and look at everything, especially from a simple standpoint, because a lot of people, again, including me, like to overthink things. And looking at this right here tells a whole different story than what a lot of people are perceiving at the moment in terms of the market. And along with that, if you look at the flow over here, again, last week still was majority bullish, 85% called to 15% puts in terms of the VIX. And I filtered for over 200,000 in premium here. You can see just scrolling down, a lot of these were $200,000, $300,000, $400,000 calls. Nothing that was super insane like we saw the previous week. If you look back here in historical flow at the previous week, we were looking at a lot of 1 million plus orders. As you can see here, 1.7 million for the 40 strike, 2.5 million, etc. from this past week, 1.5, 1.4. And a lot of these have been on an upward trend within the past 2 weeks. Now, we've seen a lot more call flow, and 78% call flow from the past 2 weeks alone to 22% put flow, and we saw those 1 million plus orders on the VIX. So this has been in an upward trend in terms of call flow. Could that just be general protection on long positions in the market? Yes. However, we've seen similarities in the past, like back in August. If you look from back here, a lot of this protection leading up around this time range. If I remember correctly, it was around the first to like third week of August, roughly, that we saw a lot of VIX flow hitting the tape. And if you remember, yeah, look at this right here, 5.1 million, 3.2 million in premium, 2.8 million, all of these prints hitting the tape, 64% call flow to 36% put flow. If you look back at that time period in August, it was right around here, these exact dates, August 19th, August 18th, and August 22nd. And if you look over here on the dates of these, it was the 17th and then also into the 18th. So it ended up catching the exact bottom of this in terms of volatility before it continued up a lot higher. So something to note as we're around this time range is this upward trend in what we're seeing in terms of VIX premium and just general call flow. I'm definitely monitoring it, especially just looking at the fact that every time we've been around this range, it has marked a bottom in volatility. So something I suggest you guys to look at as well. And other than that, though, do appreciate you guys watching this video. We'll see what this week brings, and I will see you guys in the middle of the week on Wednesday for another video.